by 150 basis points since January last year. The repo rate stands at 6.5%, its lowest level in more than 5 years. Banks have passed on a little more than half of this rate cut in the current easing cycle to consumers. Having cut interest rates, now RBI Governor Ramesh Nair is putting the onus on real estate developers, asking them to reduce prices to encourage more people to buy properties. But is there a room enough for bringing down prices? We are joined by Ramesh Nair, COO, Business and International Director, JLL India, Lalit Kumar, Jain, CMD, Kumar, Urban Development, and of course, Sameer joins us as well with his input. So, gentlemen, I'm going to go to the developer first to ask. The RBI Governor says, I've done my bit. Lalit Kumar Jain, it's up to you and the rest of the developers to bring down prices. Where's the room?
Let me return the ball to the governor. Okay. What governor can do in this juncture to unlock the value and then subsequent. Yeah. See, I think RBI can play a major role in at least unlocking the inventory. What has happened is, because the sales are down, people are not getting additional funding to complete projects. So I think it's onus on RBI. How do they support developers to complete the projects so that they can be delivered and this unlocking happens? Once the supply increases through this, automatically rates get stabilized. There are few risks ahead of us which will escalate prices instead of reduce. Like regulatory bill introduction will crunch the liquidity. Now with liquidity crunch, what you are going to see is lower liquidity to expand business. Also, what you will get is very limited stock in the market, because regulator is really going to be very,
I get that point, Lalit Kumar Jain. I think, Mr. Jain, this is something that developers have been saying. You bring in more regulation, you will actually choke the supply pipe. And as sales are falling lower, if you don't open the money supply, then you also are going to see lower supply. I'm not so sure whether I'm buying that point completely. Yes, there's some merit to it. Ramesh, what do you feel? I mean, developers say prices are as low as they can get, and in fact they're going to get more expensive going forward, but clearly sales aren't happening. I know that at every level discounts are being passed, so why not just open up and say, look, we are cutting down prices and just bring back that excitement into the market?
Manisha, at the end of the day, we need to realize that every developer is a businessman. He's not here in the business just to keep increasing his price. If there is no demand, we have seen developers reducing their prices. In many parts of the city, we have seen many developers who are actually giving anywhere between 5 to 15% discount where there is not much of demand. So that kind of correction has already happened, although research says that last year prices, the base prices went up 3%. If you look at Mumbai city, the pluses, all your floor rises, your preferential views, all this actually add up to around 20% in the city. So developers are not touching the base price in terms of discounts, but they're giving discounts in terms of all those pluses with various schemes like subvention scheme and things like that. So that is already happening. Developers today, if they need to be profitable, need to create cash flows. So I wouldn't actually agree with the governor. The discounts are already happening. Many developers in the city already offering good deals. This is a good time to go negotiate a good deal with the developer.
Okay, why is it that the governor then, I mean, I'm sure that there has to be some merit, Sameer. It's not that Ramesh will say something like this without actually having delved into a lot of statistics and facts and figures.
No, I would tend to agree with the governor a bit over here, because there are prices that have just become unaffordable for the regular buyer or the end user, and there are in many cases fresh land parcels that have got released, or the FSIs have got increased, which easily allow the developer to bring the prices down. But we are facing a very peculiar kind of a challenge out here. You see, one is that in at least the north and probably in some cases in the west as well, the the buyer is just not interested at any price to buy a new project or an under construction property unless it is from a really reputed developer, because he has lost the confidence of it ever getting executed. That is a bigger challenge than just the price cut.
Okay.
So that, to my mind...
So you're saying confidence, crisis is of confidence and not so much of pricing.
Absolutely.
Okay, this is really interesting. So
they are willing to go and pay a premium as long as they're assured they're going to get the property, or they're concentrating on buying ready properties. And ready properties, as we all know, are slightly more expensive than properties that are just being launched. That's a peculiar problem that is being faced by the developers, because their cash flows are just not going to get better with this kind of a situation, and they're not going to be able to
So, Samir,
compete.
are you saying that developers at least really don't have room to cut prices, which is what the other two panelists are saying? The problem is elsewhere.
It has to be very city specific. It has to be very micro market specific. In cities like Mumbai, where there are no land parcels available, there's no additional FSI coming, you cannot cut prices. But for example, in Gurgaon, with the new TDR and the new FSI increasing to 3.5 along the metro corridors, there's a huge benefit that many developers have got, and the FSI that they've got, the land prices for that FSI has come down to zero. So they can easily bring down the prices of those areas.
So anyway, we've got two experts for Mumbai. So Mumbai, I can see, I mean, come on, Mr. Jain, you need to smile a little bit more. Both panelists are agreeing with you that there's very little room to cut prices. Okay, let me come to then another big development which has happened in Mumbai, and how will that affect prices? Ramesh, over to you first. This whole approval process is going online from 15th May. There's a lot of excitement amongst Mumbai developers. At least the fact that if approvals go online and the cycle is cut shorter of approvals, there should be definitely value unlocking or interest costs coming down. Do you think developers will pass that on to the end buyer? Will there be a room to cut prices then?
Manisha, your first question and second question are interrelated. When Fadnavis came to power nearly 2 years back, there was so much of promise of increasing supply in the city. The only way we can reduce prices in the city is increasing supply. But what has happened in the last 1 to 2 years is exactly the opposite. Firstly, the confusion on the new DP plan. Every developer is confused what's going to happen. Land sales are not happening. Landlords think they're going to get 5. Developers think even if they get a little more FSA, they'll have huge premiums. So that comes to a standstill. The second court order preventing new construction from happening, that's a double whammy. Thirdly, the market sentiments are bad. That's a triple whammy. To add to all this, now RERA is going to come into place. So look at what all ways we are trying to stop supply. Look at the cities where there is huge amount of real estate supply. 2 cities. One is Hyderabad. The other is Ahmedabad. Huge amount of real estate supply, great infrastructure, prices highly affordable. Today you could go to Ahmedabad or Hyderabad and buy something at 4,000 rupees. That's exactly what Mumbai needs. We need faster approvals. The government wants to do anything, but every time I talk to a developer, he doesn't say it publicly in front of the government, but every single developer says it's exactly the same. It takes equal or more time today to get an approval, and the same issues persist. So the government needs to fix infrastructure more than anything else if they need to create more supply in the city, whereby prices will become more affordable.
All right, Lalit Kumar Jain, how hopeful are you that this online process which is proposed from 15th May will actually work? What I've heard is that, officials at the ground level aren't very happy about it. I mean, a lot of graft money goes out of the system, and they're going to make sure that it doesn't work till they're really whipped into action.
Manisha, you must recollect, Mission Transparency was launched by me, and this is exactly what we wanted. And I am really happy this government is taking a lot of initiative. And if really it works, then it's a fantastic step forward. It will definitely result into controlling costs, and it will also reduce cost of funding at the end. Of course, this has to start, and then we have to see what problems come. It is not that immediately next day you will find solutions. There will be hurdles, because you still have to have interdepartmental relationship where they have to clear the projects. Though timelines are given, what we have seen at ground level, people really don't respond so well within the hierarchy. But there is a very sincere approach of the Chief Minister as well as the senior bureaucracy, and I am quite hopeful that it will work.
Ramesh Nair, Lalit, Kumar, Jain, thank you so much, gentlemen. So the verdict is clear. Mumbai, very little room to cut prices currently, but there are micro markets. Amir has already pronounced one. Gurgaon as okay. I think Ramesh, you have a point to make. Go ahead.
Manisha, 3-4 things which the RBI governor could have done instead of asking the developers to cut prices. As a country,
we ran out of time, but go ahead.
Yeah, as a country, our banking exposure to real estate is just about $40 billion, which is the commercial real estate loan. And in any market you look at across the world, those are much, much higher numbers. Second is LTVs again of 75 to 80%. That can definitely be increased. Look at our default rate of the real estate sector. Most research says it's just 2 to 3%. Look at the sectors like steel, cement, power, aviation, where I've heard numbers between 16 to 25% kind of default rates. So still real estate is always a bad apple in the economy. Look at bringing something like an ATIB. The government did something during the budget, but make it more widespread. So the government can do all these things, bring down the taxes. Today, as per CREDAI data, close to 38% is taxes. Developers pay around 27% in taxes, while the home buyer pays around 11% in taxes. Bring down all these. There are so many things which the RBI can do rather than ask developers to bring down prices, because it's a demand-supply game, and the developer doesn't find demand, he will reduce the prices.
I think you've summed it pretty well, Ramesh. Thanks very much. I think I'm going to sign off on this discussion on that note, I think, and we will probably try and send the RBI governor this link, or hope that he's watching this show and implements some of those very, very valid demands. Thank you, gentlemen.